All right, we are going to get all up into this shit. So, for starters, today is Tuesday. We did not take a trade yesterday, as we talked about in our live trade, our daily bias, and our market recap. Today, this is actually a high impact news week. We have, I believe it's either FOMC or, so we have FOMC this week and I believe NFP. So we have FOMC statement, like all of this happening on Wednesday. I will not be trading tomorrow. So let's just put that out there. And then on Thursday, we have unemployment claims. I should be good to trade on Thursday. So we're trading today. We're avoiding tomorrow. And then we're also going to be avoiding Friday because there's non-farm payroll. Okay. So NFP, that's one of the standard ones that I always am going to avoid trading on. And that's just how my trading plan is aligned, so not going to go against that. Okay, moving forward for today, we only have JOLTS job openings. Okay, this shouldn't be too disruptive to the market. It comes out 30 minutes into market open. Consumer confidence does move the market a decent amount, so what we want to do is wait until that 30-minute into market open point for us to see what the market wants to do. Once that news comes out, we can develop a bias, do all that before news comes out, but we want to wait till news drops in order to make a sound decision. So unlike yesterday when we were within this consolidation range, we finally broke out of the range. So now we're starting to come back down. We're starting to retrace a bit. And this is kind of up in the air for whether we are going to, turn up to the upside or come down even lower, fill the majority of this imbalance, and then push higher, right? We could make this a retrace day, pushing back down into that or to the top of that consolidation range that we saw on the 4-hour on the S&P, right? Filling in probably the majority of this imbalance. Or, right, that could be the daily move to the downside. Or we could just continue higher and higher. So it's up to us to be able to spot that and determine where and when all of that's going to be at. So we can go ahead and punch on market open. We can see that we're already underneath these lows, so we're already within the imbalance. That's already a good sign. On the hourly, we can see that we're filling in this imbalance. I'm going to go ahead and mark this out right here because this kind of marks the top of the consolidation. Actually, right here marks the top of the consolidation prior to boom, huge leg up. So for me, this price point is huge, right? This was the price point that was holding back the big move up, and then boom, when that happened, we finally got that big move up. Okay, busting is ridiculous. Pushing through this price range, okay? On the hourly, what else do we see? We see the imbalance. We also have 1-hour highs right up here, right? We can go ahead and mark out these 15-minute highs right here as well. We don't necessarily have a lot of sell-side liquidity for us to target besides just saying, hey, this is a huge imbalance. We can probably push to the bottom of it and then get a reaction to the upside. Or if price just wants to say, fuck it, we want to dump, cool. We have all of this untouched liquidity, right? This is untouched lows, 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 untouched lows. It's really crazy. We have a lot of untouched liquidity, sell side liquidity. Notice how all of these lows just keep getting higher and higher, and there's not necessarily like a sweep of them to continue this rally up. So really what I'm waiting to happen is just for that super violent move. It'll probably end up happening either on Wednesday, tomorrow, or on Friday during NFP to end up taking out all of these imbalances down here. Okay, so that's kind of like whole week perspective on these lows. But for today, I would like to be bullish, but I really just don't see it playing out that way. I do kind of see us getting a big rush of money coming into the market, pushing up, sweeping out one of these highs, and then sending price lower, because I do think we want to fill this imbalance a lot more than we already have, because we're not even at the 50% mark of this thing yet. So yeah, honestly, I would like price to turn bullish, but I don't see it happening. So I kind of have a bearish bias today. That kind of covers it for ES. We have some draws of liquidity to the upside. I don't necessarily see any super huge actionable points to take like right now. The only thing that I see is just like these 3 areas of liquidity that could potentially get pushed through and swept out. We kind of already got the drop to the downside, one last push up, another drop. So we're currently in like this continuation of a leg down right now. I would love to be able to see or find or feel or touch a girl, but also I would like to be able to see and have this thing touch up here, sweep out liquidity, and then send it lower, because that would be really, really ideal. But most of the time, our ideal situations don't end up playing out. Let's move over to NASDAQ now. NASDAQ, we were in a slightly better situation than we were with the S&P, but still not the best price action. Yesterday, we finally broke through kind of this hourly chop of consolidation from like, I don't know, 17,606 down to 17,468, and same thing with the S&P. We're starting to fill back in this imbalance. I'm going to do something similar, mark out the top of before that big expansionary move to the upside. I do think we want to revisit this price. Along with that, we have boom, high time frame order block right here, right? We can see boom, price ended up making that leg down, sweeping liquidity. That's what caused a move up. So boom, we have 2 high confluence price points right here. We can also see price drawing towards that right now. So on NASDAQ, for me, if NASDAQ wants to come all the way down here and start filling these areas and then giving me bullish confirmation to the upside, then I would want it to be bullish. Okay, we're filling in this imbalance really, really strongly right now. So that's a super, super good sign for us. And that, awesome, we, like, again, I want to be bearish, or I want to be bullish, and that would be the easiest way out of this. However, I do think we're going to have a bearish day. On NASDAQ, this looks better to have a bullish day than the S&P, because the S&P is taking its good old time to kind of fill this in, versus NASDAQ's already making its move. Like, I'm definitely looking to see and look for reactions off of these 2 price points right here. Hopefully we can hit them like right when market opens, and then we can get more of a bias. If we go into the hourly to try and find draws of liquidity, wowzers, we can actually kind of see, like, guys, think about it this way. The high time frames are still setting up like the same positions, just on a higher scale, and it takes longer for it to fill. So if we see this right now, what do we see? Liquidity sweep, break of structure, imbalance. We're waiting for a reaction, right? And we can like scale down onto the lower time frames and be like, whoa, liquidity sweep, break of structure, another liquidity sweep, push up. You know, now we're filling in an imbalance. This could be our time to capitalize and send this thing higher to end up taking out, boom, obviously these highs that they made overnight, these highs right here, and those highs right there. Okay, so that's kind of my overall bias on gas pack. I want to see price come down here, fill this imbalance, move up, On ES, kind of the opposite. I want to see a sweep of these highs and then see price go lower. So it's really just seeing, okay, when market opens, which direction is it going to take? Okay, but we have our confluences marked out. I don't necessarily have to mark out either of these huge imbalances just because they're so freaking obviously there that like if we get reactions out of it, it's like, oh, it's a reaction off the imbalance. You know, I don't necessarily have to draw a big gray box on here. So let's go into wrap it up for daily bias, and we are going to get into trading in around 9 minutes. All right, let me stop this recording.